What is going on, everyone? I want to compare Nasdaq to S&P covered call funds. We're going to look at Goldman Sachs. We're going to look at Neos. We're going to look at Roundhill, and we're going to compare them to each other, brother and brother fund, to see which has been performing better. Should you hold both, like an S&P product and a Nasdaq product, or just one? I mean, they kind of hold some of the same stuff, so one could argue you could hold just one and be fine, or hold both for that stability that the S&P gives you that Nasdaq doesn't. But let's get into it. So let's start looking at SPY and the Qs, and we can see, I don't know, for the last decade or so that the Qs have outperformed the S&P as technology continues to lead the way, leads the rips up and the drawdowns as well. The Qs are definitely a little more volatile than SPY. That's just something you have to know when you get into it. But to be honest, either product is fine. These markets have done nothing but go up over time. I mean, I don't know of too many investment opportunities where the product is darn near guaranteed to go up over time. That doesn't mean they can't have a bad year, 2 or 3. It just means that over the course of time, these products always go up, and they have. So we can see here the Qs have really outperformed SPY since both of these ETFs' inception, and by quite a large margin. Technology leads the way, and I don't see that changing anytime soon unless a bunch of EMPs are dropped or something, and then you can get into, I don't know, sticks and rocks cover call funds. But till that happens, I don't see technology not leading the way. Let's look at triple leverage products here. A lot of people like to use these, so if we're going to throw these in for a comparison, UPRO, triple leverage S&P product versus TQQ, which is the Nasdaq. And you can see right here in this chart, look at the volatile nature of TQQQ versus UPRO. UPRO has that slight, steady, constant move up, and TQQQ has these drastic up and down movements. But as always, as it's been for the last decade, the Qs will lead the way down and lead the way up. They sell off more, but go up higher. And you can see here in total returns, that is also the case. I've been trading the heck out of TQQ the last month. I put those trades in my membership group. All you have to do is hit the join button to see which trades I get into. And I've just been juicing the heck out of TQQ the past month and been doing really well with it. Should have been doing it for the last 3 months, honestly, but better late than never. Okay, so let's go look at the Neos versions here. It's QI versus SPY. And just like the Qs and SPY, the Nasdaq version is leading in total returns. And you look at the price difference here. It's really negligible, I guess. $49.84 for the Q, and for SPY, $48.93. So I don't know, 90-cent difference between the two. So really not much. In total returns, though, it's a little higher on the Q's version here. And distributions, let me get to that. Here is the Q's version, QQQI. They generally run about 10 cents higher, 10 to 12 cents higher per month, per share, between QI and SPY. So, yeah, I own QQQI. I actually sold SPY and put all of that into QQQI, and it's just been great. I've been able to, it's been above my share price for quite some time, and so I've been able to keep all the distributions, which is really a fantastic thing about the Neos version, because it does have some growth with it, so you can just keep all the distributions. And if you see here, you know, they're very steady, the Neos versions. Okay, now this one is going to be, the Roundhill version is really different than the Goldman Sachs and the Neos. So, but this still remains the same. The blue line is the QDTE, the Nasdaq, and XDTE is the S&P version. And again, the Nasdaq version does lead the way here as well in total returns. And again, QDT, I own that one as well, has been above my cost basis for quite some time. And I've been able to keep all of those distributions as well. And you can see in total return since inception, QDT up 12.74 if you kept them all, and XDTE up 1206. I don't think you can go wrong with either product here. However, these are drastically different than the Neos and Goldman Sachs. You have to know that, and I'll show you that later on when we look at the price charts. Really, a lot of erosion with the Roundhill versions. But check out the price difference here, right? Here's Roundhill QDTE. It's trading at 34.80. Right, if you remember the Neos version, the Q version was actually higher. And then if we look over here at the Roundhill, it's at the S&P version, it's way higher, 43 versus 34. So there's that. Now here's the distributions for QDTE. Right, it's been relatively stable, staying in this 20 to 28 cent range. We did have a couple drops below that. You can see down there June 12th, it got down to 14. But look at the distributions here for XDTE. They tend to be higher some months, or some weeks rather, versus the Q's version. So, yeah, that's definitely a different thing than the Neos version. Higher distributions, more or less, with XDTE versus QDTE. Here's the Goldman Sachs version, and again, third fund in a row where the Nasdaq does lead the way as far as total returns go. And it's not a drastic difference here. 26% if you kept all the distributions on a Nasdaq version versus 24 on the S&P version. So not a drastic difference, but again, just like the other two, the Nasdaq funds tend to lead the way, and that's probably, I don't see that changing anytime soon, but I guess it could, right? And you can see the price here. The S&P version is higher than the Q's version. Not by much, like 20 cents or whatever, but still it is higher. So if we want to look at the dividend history here between GPIQ and GPIX, a little bit higher, right? Here's a Q's version. They range in this 40 cent, 38, 40 cents, whatever. And then you're going to see a little bit less here on the SPY version. So two funds, meaning Neos and Goldman Sachs, they pay higher distributions on their Q's version than they do on their X version. Now, this is where it really gets interesting to me, is how are they as far as the growth goes, right? And so here's the Q's, right? We can see it, continues to make new high after new high. And the Q and the QQI version does lack a little bit, right? So there's the former high over there at 54, which is way over there towards the left of the chart. So there's definitely some erosion with the Neos version. Now here's the QD. Now, there's obviously significant difference between this one and this and the Qs, right? There's a lot of erosion here with the QDTE fund, and it does have some growth potential to it. Not to the level of QQQI, but there is some growth with it. But this is really, the erosion here is pretty significant in comparison to QI. And then if we look at the Goldman Sachs version, it's really done really well with its growth. And you can see here, it's better, obviously better, as far as the growth aspect goes than QDTE, and better than my girl QQQI. I don't own the GPIQ, but I may in the future. So I've really gone, just me personally, just all into Nasdaq versus S&P. I used to be S&P related primarily. Now I'm just Nasdaq, and I don't see technology fading anytime. So I guess it could, like I said, a bunch of EMPs could come down and technology will fail, but I'm just going to use the last decade of history and just continue to ride the Nasdaq. Now, you have to understand it is more volatile, and when we do drop, the Nasdaq versions will drop higher than their S&P counterparts. So if you want that stability, the S&P is probably the way you need to go. If you're okay with a little volatility and want that extra oomph, then the Nasdaq versions are probably for you. I hope you enjoy the content. It's Mike. Talk to you later. Bye.